learn. You got to build the knowledge base and start talking to people with money, and don't get discouraged. There is a lot of wealth to be made in this business. This is not a get rich quick business, at least not in California. It's going to take some time. It will pay off.
Hey everybody, welcome back to the Cashflow podcast, where we talk about turning properties into profits. I'm your host, Jason Yoss, and today I'm here with my guest, Maxwell Brown.
Hi.
Maxwell, how you doing?
I'm good. Happy to be here.
Excited to have you on. Specifically, let's talk a little bit, let's dive right in. Let's talk about who you're with and what you do.
Yeah, I'm with Commercial Asset Advisors. We're a private boutique shop down here in San Diego. Been in the business for about 4 years now, and I specialize in multifamily investment sales. So that's my bread and butter, try and stay 5 units and north for true commercial deals. I do dip into the 3 and 4 unit space here and there for the close clients. That's my bread and butter.
I love it. So you said about 4 years. When exactly did you get in the business?
So the funny story on that one is I actually was hired and started on at CBRE, so the largest of the commercial real estate firms, the same exact week that COVID all went down. So funny enough, I started on a Monday, and then literally on Tuesday, management is telling us, hey, make sure to get your remote login set up. We may need to implement this. I'm like, I need to go through my training videos. I can't dedicate time to this. This is silly. And then Thursday rolled around and they said, you're working from home Friday. And that was my start in the business. And
what a way.
Saw so much turmoil, and it has been cool seeing, a downturn, a boom, and now another downturn all in just this 4-year short time frame.
What a way to start COVID. And so talk me through a little bit. So you were with CBRE, mm-hmm. and you pretty much, grinded your teeth on apartment deals. And like you said, north of 5 units. What's that sweet spot? Is it 8 units? Is it 80 units? Where are we talking about?
So my bread and butter and my specialization is the private capital multifamily space. So what that means is we're dealing with high net worth individuals that own, maybe 1 deal, 10 deals, 50 deals, 100 deals, whatever it may be. But I'm not dealing with institutional level clientele base. So I'm not dealing with BlackRocks. I'm not dealing with Red Hills. I am dealing
Not yet anyway.
Yeah, not yet. But I am dealing with, very high net worth individuals. I'm also dealing with, investors and syndicators that are pooling together capital from 3 or 4 parties, putting these things together.
How did you choose this? Like, what made you decide to do the multifamily apartment space?
So what really attracted me to commercial real estate is I've always been a sales guy. I love sales. I love talking with people. I love building relationships. I love how every day is different from the next. And we face lots of ups and downs and hurdles and challenges to get through. It's not monotonous. So I really wanted to be in sales. I was an economics background, and I really like numbers too. And I like being able to prove out profits with numbers. Like, hey, this, what I do is not rocket science. It's a fairly basic underwriting model. Here's profit or income in, expenses out. Here's our profit. It's nothing crazy. And I was looking at, maybe some investment banking, maybe some tech sales. Tech sales, I couldn't get excited on the product. Investment banking, I was like, that seems kind of boring, being behind a desk and being just a number cruncher all day. And one of my buddies in the business, he worked for more of an institutional firm, and he was an analyst. We sat down, and he showed me multifamily real estate and how it's a sales gig, and we have fairly simple underwriting models to force equity growth in these. And it's not really, there is some guessing, and there are market changes in this business, but for the most part, we can prove out a profit, and we can prove out a model, and we can show how we're going to get there. And you're going to be behind a desk 70% of the day, but 30%, I'm out in the field, I'm getting to explore, I'm getting to touch assets, and this is something I wanted to own as well and build my own portfolio. So I got really excited. about that.
It's hard not to get, I mean, especially for, property junkies like ourselves, it's hard not to get excited when you see that, residential, multifamily. They're kind of like little businesses in and of itself, right?
It is. Each property is a business. Being an agent is a business, and it's a fairly simple business. It's not necessarily easy. I'm not saying it's easy,
Absolutely.
but it is easy to understand and to take the first steps.
So talk to me about then finding deals. How is it that you go about, getting, the buyers or sellers for this type of product?
And is that in reference to my career as an agent or maybe like as a principal?
Well, let's just talk about as an agent first and foremost. I mean, there are, thousands of small boutique multifamily apartments in San Diego County, for example.
Yep.
How does someone like yourself go about, getting those owners who want to sell? And then when you have a buyer, how do you help them acquire a piece of multifamily property? For example, like in PB, I couldn't find anything out there if I was looking, So walk me through, starting with just what you see on a day-to-day basis, finding a deal.
It is a very competitive space as an agent. There's thousands of agents. We probably have too many agents, right? And not all the agents are built the same. There is a differentiation in, knowledge base, skill level, all of that. And so the first thing that you need in order to be a successful agent is you need to know the market, and you need to be able to add value to your client base. You're speaking, in my space specifically, you're speaking with very high net worth individuals that are realistically worth, 5, 10, 100, $300 million. And they get calls from guys all the time. And their time is very valuable. Their time is very slim. So if you don't have anything to add to the table to them, whether it's a creative strategy on marketing, whether it's something to increase revenue on operations, maybe it's regulatory updates on how to protect themselves moving forward when California throws a curveball at you, or you get some new regulation where you can add more value, like the ADU scenario.
Right.
So you need to know your market and you need to know your product, because you need to be able to speak intelligently on it and help your clients with something that they maybe don't know. So you need to learn first.
Right.
And then you can get on the phones, and then you start talking with these guys. And maybe there's a strategy they haven't thought of. Maybe their returns are really low, and you can show them an avenue to increase their either, my goal when I'm cold calling folks is either, one, how do I make them more money? Two, how do I reduce headache? So those are the two major items that folks are looking for, and you need to know how to get them there. And then from there, you can start shaking loose some listings, shaking loose some deals. Once you get a couple deals under your belt, you might start getting some inbound.
I like it. When you have a buyer, and again, as we talked about, it's so hard to find a good deal. What are the things you're doing to help them find that good deal? I think from a regular real estate background, they got the MLS, and you just find them on the MLS and go, there's the ones that, take a pick, or how do you go about it?
Yeah, so finding deals, I think, going back to one of my earlier notes, the most important thing is knowing the market. If you don't know the market, you could have a deal in front of you and you don't know it's a deal. And maybe the other guy or girl on the other side thinks they're selling something at top of market value, but they're missing an aspect of the deal. They're selling a little triplex on a 10,000 square foot lot in San Diego, and they want $1 million for it, $300,000 a unit, which is market pricing on the price per unit, but they don't really know that it's a land play and that this is actually, the zoning has been changed to complete communities here, and you can build 50 units, and the thing's worth $1.5 million as land. So you got to know the market, you got to be creative, and you have to see avenues for other ways to increase value or growth. And so you can find stuff on the MLS that the other side has no clue is a deal, but is a deal. And that's your value as a broker and representation to a client, and say, hey, these guys have no clue what they got here. Let's shoot them an offer. Let me talk to them. Let's play a little dumb too while we're at it. There's
nothing wrong with that. What when you're looking at a property, what is the kind of investment philosophy that or the lens of that you're looking to make money on a property?
Can you say that one more time?
So when you're taking a look at a deal, what's your real estate investment philosophy and how you're going to be able to make it pencil out?
It's a tough question because everyone has different goals.
Sure.
And everybody is in a different stage of their career. So I have lots of clients that want big equity growth. They don't care about cash flow. They're going to be negative cash flow for a year, but they're going to come in, they're going to get this 6-unit property. They're going to convert some of the garages, and now they're going to make it an 8-unit. They're going to renovate it. They're going to make negative dollars for the first year, and then they're going to flip it, and they're going to make $500,000, And then you've got the older high net worth client that's got a rundown building, and he just wants a 5% return, and he wants less headaches. So each client and each investor has a different goal. For me, when I'm looking at deals, I'm young, and generally, when you're young, you want the big equity growth opportunities. And then when you get older, you want just more stable cash flow, little higher cash flow, and less headaches to enjoy the wealth that you've created.
It makes a lot of sense. It's so hard to understand that the fact that here in San Diego, property is so expensive. It seems like the barrier to entry must be very difficult. What do you tell your initial apartment investor? Like, what are you telling them when they want to get in?
Yeah, and that is probably the biggest hurdle with California real estate is the barrier to entry, and the necessity for capital is so high. It depends on how much capital you're working with, obviously, on what you can get into a deal for, but realistically, you're going to need some cash in the piggy bank to enter the market. I mean, if you're getting into like a duplex or a triplex, you can get away, specifically a duplex, you can get away with a much lower down payment with FHA financing, right, super high leverage, but, be ready for some strategy to increase cash flow or yield. Otherwise, it's going to be negative cash flow. So have a strategy there. If you want a 3, 4, 5 unit, you are going to need some money in the bank to get there. But when you know the market and when you have a deal and can prove out that it's a deal, there's a lot of people that want to own quality California real estate with an easy proven model. And so if you can prove that out to investors and you know some of the sources of capital in the market, it is pretty easy to raise capital. And that was one of my biggest hurdles in the business. Is I was about a year in and I found this really screaming deal on a 4-unit in Imperial Beach, actually, and it had a bunch of garages, and it was like right when COVID was starting to settle down and prices hadn't jumped up yet, and it was like $800,000, and I think,
wow,
yeah, and I think I had like $100,000 in the bank, maybe $80,000. I was like, I just don't have enough yet to take this thing down, but I know it's worth way more, and I can make it worth way more. But I was still young; I didn't have quite all the pools of capital to source that deal or to fund it. But today, if I had the exact same amount of money in the bank, I could take that deal down in 24 hours because now I know who's doing the deals. Now I know who wants deals. And I'm just a phone call away from saying, you want to be my partner on this? And we could have gotten it done.
Absolutely. I think a lot of deals are lost because there isn't enough, not experience, but network. You don't have enough of a, let's call it a team behind you to understand that there are people you can call to get financing. There are ways to be able to prove out a model that someone else wants to partner with. So I love to hear that. And so talking about a deal, let's talk about some good or bad deals that you've been involved with. So why don't we let's start with your best deal.
Yeah. So the best deal that I've achieved for a client, and there is another best deal that I've achieved for myself, but best deal I achieved for a client is a pretty simple and funny story, and that's why I want to share this one. And it's really the simplicity of this business and just...
So where and what type of product?
Yeah. So this was an 18-unit multifamily deal in central San Diego, just a couple blocks away from San Diego State University. So infinite pool of demand. You'll always have demand there. Quality location, just on the verge of some good retail, from the college and a single family neighborhood. And this deal was actually listed on the MLS. And actually, I take that back. It wasn't listed on the MLS. It was only listed on CoStar.
Got it.
So it only had like commercial agent visibility, and it was listed for a year. And the seller was living out of the country. He just wanted to liquidate it. He was getting a little bearish on the market, and he had his property manager list it for him. So this was kind of like a second in line task for his property manager.
Property managers who are also doing sales. We talk about that quite a bit. I'm a big advocate of of each person on your team should do their job. Managers manage, your agents, they do the sales, your maintenance people do the maintenance. So 1 year on the market, that's crazy.
1 year on the market. They listed it for like $6 million and then didn't go anywhere. And after, 10 months, they finally dropped it to like 5.6, 5.7 million. Right. And I had my eyes on it. I was like, kind of surprised this thing hasn't sold yet. It's not quite good enough of a deal yet for me to pitch it. I'm busy with other stuff. Right. They dropped the price, and, I've got a couple heavy hitter clients that always want deals, that always have cash. Right. And great position to be in.
Right.
But it's listed at 5.6, and all I did was pick up the phone and I was like, hey, I've got a guy that could be a fit for this. Where do you think this deal is deliverable so that I'm being time efficient? That was it. And he says, it's just got to have a 5 in front of it. Yeah. What does that mean? That means 5.0 will probably do something.
Or at least that's what you wanted it to mean. Hey, 5.0, your client. It's funny that you said all you had to do was pick up the phone, have a decent conversation, advocating for your client, but with the other agent, and meeting of the minds came together.
Yeah. And, the agents don't get paid unless a deal closes. We don't get paid to list properties. We don't get paid to talk about properties. We get paid to close properties. So he wants to close it. His clients had this out here a while. Everybody wants to get a deal done. So within 24 to 48 hours, I brought him an offer at 5.0 mil, all cash, easy close with a very reputable client that I've worked with in the past. Somebody that I knew wasn't messing around, and we got a counter back at 5.1. The next day, we're in escrow, and this deal, I could sell this thing all day long for 6.0 million. And we get in. It turns out there's some hair on it. The tenants were...
Talk about that. Let me hear about when I hear some hair on the deal. Obviously, it was sitting for a year. What are some hurdles that you did run into?
So, and that's why we got a great deal on it, because some folks weren't willing to take this on, or they got a little scared away. But at the end of the deal, it wasn't anything that an experienced investor should be worried about taking on. So ultimately, they were running the property kind of as a refugee camp.
Wow.
It was a super, super nice property, great location. Everything about the asset itself was fantastic. Renovated units, mostly 2 beds, great return metrics.
Wow.
But they were bringing in like these voucher program tenants. So the city and some church groups were giving these refugees coming overseas 6 months of free expenses to live here. And the refugees were coming from third world countries, and they were treating the property like a third world country. Windows open, yelling, there's some trash piling over the trash can, people yelling, some things that scare away, the average, less experienced investor that just wants an easy cash flow deal. But, in reality, when we're looking at this deal, these refugees are running out of their funding in 6 months. And all the leases are month to month, and they're paying pretty much market rent at this point with where their leases are. And these guys don't need a fully renovated deal in a super nice location. These guys just want affordable units. So most of these refugees are going to turn over after 6 months naturally anyway. You're not going to have to do anything with them. You're just going to say, here's a unit for $1,700. You're paying $2,500. If you want to leave and get a cheaper unit, you're free to do so. And so my client saw it the exact same way. And so ultimately, we're going through that deal. It's clean. Other than the tenants, they agree with the thought process and the strategy.
They could handle it.
They can handle it. Let these turn over naturally. Maybe we encourage 1 or 2 to leave with literally $1,000 cash for keys. And we ended up knocking them down like another 60 grand in the deal, found a couple items. So we closed on the deal at $5,065,000, which was like $280 per unit, and like
awesome
a 6.5% cap rate, which in this market is
unheard of.
Insane.
People are past going on 4 right now.
Exactly.
Wow.
Exactly. So when we closed on that deal with those tenants, I think I could have sold it for $6 million. After, we see some turnover, maybe 60-70% of the tenants turn over naturally over the next year. That's probably going to be a $6.5 to a $7 million property.
Amazing.
So $2 million made for the clients there in realistically a 1.5 year hold and turn period.
I love it. That's you watching the market, knowing the market, watching this deal sit, and then picking up the phone and talking to your counterpart to help bring your client a win-win.
Yep. So you got to call and ask.
You got to call and ask.
Yeah.
I love it. Max, let's transition then. Let's talk about maybe not the best deal.
Right. And so one thing I want to preface on this is that the best deal, I was representing the buyer. And probably the worst deal that I've been involved with was I was representing the seller. So I got the seller, great deal, buyer self-repped, and it was a loss for them. So what happened on that one was...
So you were representing the seller, and you watched a buyer come in without an agent and purchase this deal, and that's how we're setting the stage?
Yes. Okay. I watched the buyer make a mistake, but that was not my fiduciary responsibility.
Right.
The buyer had his own license, and the buyer was... their bread and butter was single family home fix and flips, and they are successful with the single family home fix and flips. But
where was this one, and what kind of product was it?
This one was in City Heights. It was a 6-unit multifamily deal, and City Heights, for those that don't know, is a rougher location in San Diego, and specifically in City Heights, this is even a rougher block and street. And City Heights is bordered by some good areas.
Right.
So just a mile or two away, it actually is nice.
Every street in turn gives you a different set of positives and negatives throughout San Diego for sure.
Correct. So once again, you got to know the market.
Got to know your area.
And the location. And so these guys were branching into a product space that they're typically not working with. They did one deal that worked out well in this product space, and now they're thinking we can keep chugging along. Okay. But they got into this deal at, without giving all the details away and going into the weeds, they got into this deal at like $1.8 million. They spent, and this deal, also we sold this right at peak market. Right. So this was February of 2022 when we entered into escrow. So a little unfortunate on the timing. Interest rates were still low, and there was still a ton of liquidity in the marketplace looking to be allocated to these assets. By the time we closed, we started seeing interest rates rise. So when we went into contract, we were probably at like 3.5 to 3.75 rates. When we closed, we're at 4.5.
Right.
2 months later, we're at 5, and it's like, whoa.
Yeah, by May, we were already May, June, July was a crazy time.
Insanely fast ramp up in rates. Maybe the most volatile it's been in terms of how short of a window rates came up. And so, at the end of the day, those guys got into the deal at 1.8. They probably are putting they probably put 600 into it because they did 2 ADUs, 300 grand plus 300 renovation, plus some selling costs. All in, these guys are in the deal at probably 265, maybe a touch more.
So what were they trying to build? They were trying to trying to take the 6-unit and turn it into what?
They were trying to turn it into an 8-unit and renovate the existing units.
Gotcha. Okay, got it.
And they were thinking they were going to exit at $3 million.
Gotcha.
Market changed. Underwriting was off. Location was off for their underwriting. Right. They had the thing listed at 3, then they dropped it to 2.8, then they dropped it to 2.6, then they dropped it to 2.4. It's probably a 2.2 deal. They're probably going to lose $600,000-$700,000 on it.
Wow. And do you think that their underwriting was just off on the fact that how much capital would it take to do the renovation, or was it that even with the rents, was it filling up with rents? Because a lot of time, it's a lot about what does it rent for? What are your expenses?
Yeah.
What's the real lens that they could have mispenciled it by?
Yeah, and so it's a great question on knowing the asset and the market. So they were too aggressive on their rents, in my opinion, because they were misjudging the location. And then also when they made the ADUs, They converted the garages and they took away all the parking.
Right.
So they're thinking that they're going to get rents that have parking with them. That's what they're looking at, the rent comps. But, filling up a unit in a rough location at a high dollar amount with no parking, very, very difficult.
And they overpriced because they thought, well, I got a renovated unit now, so that's going to bring me X. Well,
right.
I see that quite a bit. Nice.
Yeah. And then they're also just incorrect on the cap rate exit. So just, overall not knowing the product, not knowing the location.
I love it. And it is a good lesson, for changing what you do, what your product expertise is. Going from single family to multifamily, there's a steep learning curve, and sometimes that's going to cost you. All right, let's kind of close this out with two questions. The first one is biggest challenges that you've seen in this space. And the last one, lasting piece of advice for, the young entrepreneur looking to buy.
So, biggest challenge as an agent, I would say, is, it's a front-loaded business. You're not going to make money in your first year. Second year, if you're good, maybe you start to see some real paychecks. It doesn't start to take off till 3, 4, 5 years is when it really hits big. So, front-loaded business on the agency side for challenges. For principal, challenge is going to be capital to enter. The solution there: know the market, get to know people with money, and it'll all fall into place. And then piece of advice for the young investors out there is, learn. You got to build the knowledge base and start talking to people with money. And don't get discouraged. There is a lot of wealth to be made in this business. This is not a get-rich-quick business, at least not in California. It's going to take some time. It will pay off.
Patience, the word of the day. Be patient, know your market, know your model, and you'll be successful.
That's right.
I love it. Everybody, Maxwell Brown from Commercial Asset Advisors. Thanks so much for being here. Really appreciate it. You absolutely added a ton of insight that we normally don't see from your day-to-day real estate agent that hasn't spent so much time in the boutique space. So I really appreciate it. Kudos to you. Everybody else, thank you for tuning in to the Cashflow podcast, where we talk about turning properties into profits. See you soon.